All right, so let's just take a look at market open. We'll just keep an eye on ES for now. Um, so overnight, as we saw through Asia, we did leave this new week opening gap, and in London we tagged. Let me see if I have it here. In London, we had an SMT. One moment. So you can see it better here. So on London, our overnight, ES came up, didn't take the highs, NQ did, so ES was the weaker asset. So knowing that, going into today, I was also acutely aware that we kind of fell below this structure here, and we did have this no wick candle here with this large opening gap, new week opening gap that had yet to be tapped into. So if I could see weakness, like I do not like shorting in a bullish market like we are, but pullbacks are going to happen. I need to see a lot of confirmation to show that. So as we've already seen, so we saw in the higher time frame, we've a large SMT, we have areas to target, and I'll show you this trade I took today. So really what I was looking for coming into today is, as you can see, here's our new week opening gap on NQ. We closed through it with momentum and left this black box here. I have marked here, this is on the 5-minute time frame, is our most displacive fair value gap on the 5-minute. So I just wanted to see when we approach that, if we did. So now I want to see, okay, if we can close through this with momentum, really I'd be looking at NQ because it's a more bullish asset. But just for example, I want to see how we react to this gap. So this is exactly what I want to see. So what do we do here? We form a 5-minute fair value gap. So now I'm keeping an eye on this fair value gap to see how price reacts to it. So at this point in time, it's starting to look somewhat bullish, but we immediately rebalance. So at this point, I put my model stop in, and it's worth noting. So when I put the model stop is basically the 5-minute candle that created the fair value gap. And when you're placing these stops, always put it like at least 0.25 ticks above the wick that created it, because we'll often come up and just touch this wick and then reverse, which we did today. So as you can see here, that was my entry. I got tagged in, and my God, did we come close to, and this, I was getting quite worried here. Why was I getting worried? Is because we were stacking all this low resistance liquidity, and typically, and we're also in a daily fair value gap, so I am in premium and we're stacking this low resistance liquidity. So at this point I was like, damn, this is probably going to reverse on me. But as you can see here, we actually came up right to where I talked about. So there's that candle, we came right up to it. Thank God I had a 0.25 buffer on it. And at this point here, really what I wanted to see is, we created a little bit of a 5-minute here, how much speed we could close through this with. And yeah, from there on, really what I was looking for was, it was a long trade to hold through. We eventually got there, and now we're totally selling off. My take profit was, there was a 4-hour gap fill, and we also had this large wick here from one of our major moves up last week. So that wick was at the end of a 4-hour fair value gap. So I was just simply looking for that fill, and we're continuing down now. And as you can see now in hindsight, I know a lot of people were trying to trade the bullish side of price action. And I can see that we did take this low, but we were showing no sign right here of wanting to rebound. And it is a Monday after all, which is typical. You know, like we don't see a massive reversal play on a Monday. Typically what we see is what we're seeing here, as far as we come down to we have all this low resistance liquidity here, take some of this, and then as the week moves on, we might see that reversal, and we can continue on with our trend higher. And as well as today, one thing I reviewed my data from really May was my best month of the year, and June and July were pretty awful in my first 2 weeks of August. And I really I went back over the weekend just to check what was I doing different in May, and what was I doing different to May than I was doing in June and July. And obviously price action wasn't great for the Model I trend. I'm kind of looking for good momentum trending price action. I think most people are, and that's where my model thrives. But one thing I did notice myself doing more was when I was very good at noticing when conditions did shift and downsizing, reducing my risk reward. That was all great, but there was one habit that was costing me heavily. And really what it came down to is me operating out of a place of fear when my account was in drawdown. What I was doing was, like, I was often picking directionally the right direction. My take profit, stop loss was often getting hit. And where I was going wrong is, when we are in this like really back and forth choppy price action, it's a lot of seek and destroy. I was overly managing my trades, where because we were into like tougher action, I was like, okay, I got to be more on top. Like I took the approach of, well, I've got to be more on top of things then to reduce risk. And all I ended up doing was getting in the way of my own progress. And so many times I would pull my stop to half R, which is great, taking half my risk off the table, but the price would just go in my direction. So it wasn't that my read on the market was all that bad. It's just I kind of started taking a more defensive approach when it wasn't necessary. Just give the stop more breathing room, reduce my R multiple, because we're not getting a big expansive price action we were in May. And if I had done that, it would have been probably break even, slightly profitable, but like it was I'm down like 3 or 4 R over that period. So even going into today, I set my TP and stop loss, and this would have been a typical day where I would have got stopped out. I would have micromanaged this trade, no doubt in my mind. Like this would have been a killer trade. So once I entered, I was happy with my with both my levels. I wasn't being greedy. It's about a 1.5 R. I just got the hell away from my computer. And I was like, all right, I'm not coming home until if we take out this low after afternoon, I'll go to break even. But that was like really my only criteria. I just let the trade breathe. And I have total confidence now in doing that because I have quality data to make those decisions off. It's very easy to change your pattern of behavior when you can just rely on your own data. It's super hard to make those really structural changes to your trading. If you know for sure, if I continue doing this, my edge gets more profitable, then you're just acting out of emotions if you do anything to differ. And a big way I help myself, especially in the initial stages of implementing something like this where I'm not adjusting stop loss, is just to remove myself from the possibility of me being able to do that. So for me today, what that is, well, let me walk to a cafe while my trade is live. Walk to a cafe that's far enough away from my apartment that I can't even get back to adjust it if I want. I know it probably should have better willpower than that, but especially when I'm implementing something new that I'm not used to doing, I just put myself out of the possibility of being able to make that change. And also, I don't have my passwords in my phone to manage the trade. So whatever is happening, it's happening. I can look at the trade if I want, but there's no way I can change it. And thank God I did that today. This was day one of trying this new structure of basically my day is done once my trade is entered. From there, the markets are going to do what the markets are going to do. I can only control my inputs, not what happens after that. And really just embracing that mentality towards my trading. So yeah, very happy with how today went. It was a tough, long trade to sit through, longer than I'm used to, but we got the results I wanted.